Welcome to Iraqi Dinar News, where we deliver verified updates on Iraq's economic landscape and the future of the Iraqi dinar. Today's report dives into the ongoing developments surrounding Iraq's currency reform plans, digital transformation initiatives, and the broader involvement of global stakeholders supporting this financial shift. As we look at recent announcements, structural reforms, and digital initiatives, it becomes increasingly clear that the groundwork for major economic evolution in Iraq is actively being laid, despite resistance from entrenched interests. The Central Bank of Iraq, CBI, has reaffirmed that the initiative to delete the zeros from the dinar remains active. This policy, designed to stabilize Iraq's currency and streamline monetary transactions, continues to face opposition from groups tied to the black market and illicit financial operations. These parties resist reforms because greater transparency would undermine their ability to exploit the current system. Nonetheless, CBI Governor Ali Mohsen Al-Elik has emphasized that the process is progressing and efforts are intensifying to enhance the dinar's strength. One of the key points highlighted by the central bank is that Iraq's currency strength doesn't stem from citizens alone, but from the country's vast economic potential and resource base. With support from national leadership, including Prime Minister Mohammed Shia al-Sudani, the push for monetary reform is gaining institutional backing. Al-Sudani has publicly asserted that the dinar will become stronger than the US dollar, a statement reflecting long-term national aspirations supported by coordinated reform strategies. Crucial development is the decision not to expand or alter current currency denominations, including the 25,000 dinar note. This clarification aligns with the broader goal of restructuring Iraq's currency system without contributing to inflation or depreciation. Large denominations, such as the 50,000 dinar note, are intended for commercial use and future transactions involving high-value exchanges. The CBI recently hosted a delegation from the European Bank for Reconstruction and Development, indicating Iraq's growing integration into international financial systems. Discussions centered around modernizing banking services, promoting monetary stability, and transitioning to digital financial technologies such as artificial intelligence and big data analytics. These innovations aim to strengthen oversight, improve service delivery, and reduce systemic inefficiencies. International backing for Iraq's reforms continues to be robust. Key institutions, including the International Monetary Fund, IMF, World Bank, U.S. Treasury, Federal Reserve, and the United Nations are aligned in their support. Their role involves providing technical assistance, financial guidance, and infrastructure support to help Iraq transition into a modern financial ecosystem. A major focus remains on the digitization of Iraq's banking infrastructure. The Ministry of Finance recently held strategic meetings with major state-owned banks Revaluation and Rashid, alongside Ernst & Young, to review and advance the restructuring of Iraq's banking institutions. Topics discussed including updating credit and deposit systems, evaluating foreign branch operations, expanding banking services, and aligning internal processes with global compliance standards. In tandem with these reforms, Iraq's legal framework for digital transactions is evolving. The publication of Iraqi Gazette Issue 48/26, dated May 19, 2025, enforces new regulations under Article 28 of Law No. 78 of 2012, which governs electronic signatures and digital transactions. These measures are intended to facilitate secure, verifiable, and encrypted financial communications through tools such as smart cards, cryptographic keys, and secure data protocols. This legislation aligns closely with the anticipated launch of the digital dinar, Iraq's proposed central bank digital currency, CBDC. Statements from the CBI governor confirm Iraq's readiness to embrace this next phase of digital transformation. Implementation of this digital currency would not be possible without the consent of key regional and international stakeholders who continue to oversee and guide Iraq's financial reformation. Digital integration is now central to Iraq's economic planning, as reflected by directives to accelerate transformation timelines and meet institutional modernization benchmarks. Iraq is also updating its list of recognized electronic services and systems to ensure all necessary infrastructure is legally and technically supported. These policies reinforce Iraq's commitment to becoming a digitally secure, globally integrated economy. In summary, Iraq's deletion of zeros initiative, modernization of its banking system, and adoption of the digital dinar are all parts of a synchronized effort to build economic resilience, transparency, and long-term financial stability. These changes reflect more than just monetary adjustments. They represent Iraq's bid to re-establish global economic credibility. Stay tuned to Iraqi Dinar News for ongoing coverage as these reforms unfold. If you found this information valuable, be sure to like, share, and subscribe. Your engagement helps bring clarity to complex financial developments and keeps the community informed.